June 26th, 2026. The market is holding on by its fingernails, and the rotation under the surface is flashing a clear warning. Asia had a rough night, and that set the tone. South Korea's US-listed ETF dropped nearly 4%, and the KOSPI native index fell close to 6%. Japan also weakened, Europe slipped, crude oil fell 3.5%, and gold rose over 1%. That combination, sharp Asian selling, falling oil, rising gold, is a classic risk-off signal, and it flowed straight into the U.S. session. Here's how the U.S. session landed. SPI closed at 728.99, down nearly 0.75%. QQQ got hit harder, down 1.4% to 706. Tech is clearly underperforming the broad market, which is an early warning sign, not a green light. The VIX closed at 18.4, down on the day, but that number is misleading. Intraday, the VIX spiked to 20.7 before fading, and over the past 5 sessions, the VIX is up more than 12%. The trend in volatility is higher, not lower. The close is deceptive. On the dollar, the DXY is at 101, still in an uptrend, and its RSI is at 70.8. That's overbought territory, and we've flagged it across multiple sessions this week. An overbought dollar tightens financial conditions globally. That headwind hasn't broken. Now here's the level that matters most. SPY closed at 728.99, breaking below the 729.65 support level we've flagged all week. That level did not hold. QQQ at 706 sits just above its 50-day near 702. That support held, but without any meaningful recovery. The 721 resistance on QQQ has now rejected multiple close attempts across several sessions. The sector rotation today is the clearest signal. Healthcare surged nearly 3% to record highs. News today confirmed the move. Consumer staples and utilities also gained. Technology fell 2% and industrials fell 1.6%. That's defensives leading while growth gets sold. A textbook risk-off rotation within equities. Money is moving, not leaving. But the direction says caution. One thing worth noting, our internal quantitative model is actually leaning slightly higher towards 735 on SPY. But when Asia sells off sharply, defensives lead and support breaks, I weight the structural picture over the model signal. The base case is continued pressure. SPY has already closed below 729.65. The next meaningful support is 720 on SPY and 702 on the Q's 50-day. The setup only improves if SPY reclaims the 50-day near 732 and Q's close above 721, with VIX retreating below 17.5. The next confirm or deny event is Sunday night futures and Monday's Asia session. Watch whether Asia, particularly South Korea, stabilizes or extends the sell-off. That is the clearest real-time signal for what comes next. That is today's market brief. This is market analysis for educational purposes only, not financial advice. If this breakdown helped, hit the like button, subscribe for the daily market brief, and check back Monday for the next update.